Today's market call is presented by Fidelity Investments and their all-new advanced trading platform, Fidelity Trader Plus. With Fidelity Trader Plus, you can customize your preferred tools and charts and tap into crucial data across all your devices. So I can save an order on my desktop at home, get a mobile alert here at the studio, and complete the trade in the Fidelity app without starting over. Try it for yourself at fidelity.com/Trader Plus. Day of December, the year's coming to a conclusion. It's 11 a.m. on the East Coast. That's Dan Nathan, who is waxing poetic about a pretty epic Sunday wagering on the National Football League, the league where they play for pay. But we're not here. We're not tasked with doing that. But it is Guy. It is Dan. I think it's just the two of us on this fine yet bit of a rainy Monday.
Yeah, it's
the window there. That's
misty here in New York City. Rainy Monday for you, Guy. And let me just tell you this: I'm feeling a little bit like a Trader Plus today. You know what I mean? I'm moving around. I got the things all over. I want to trade on the desktop. I want to trade on my laptop. I want to trade on my iPad. I want to trade on my iPhone. You can do it all. Trader Plus. There you go. Happy Christmas. That's how my people say it. To your
in this country, we say Merry Christmas.
Yeah, but we're Happy New Year.
Thank you for correcting my English.
Trading Places. If you haven't seen it, run out and watch that movie. Go to the where would you get that tape?
Blockbuster.
By the way, I got to tell you, this Netflix is having problems. I'm going to tell you this right now, and I'm being serious right now because you've said this. You have been a staunch bull on Netflix for as long as I can remember. Anytime there's some dislocation, they used to give weak guidance or subscriber numbers, or they were spending too much on original content, or this and whatever. And there were some massive breaks in the stock. I mean, people forget in 21 to lows in 22, they were having subscriber misses. They obviously had a huge pull forward during COVID. I'm there. I promise you I'm there. And then the stock went down 75% from 21 to 22. Now, all of a sudden, they stopped giving subscriber numbers, okay, because they basically, maybe it was because of the quarter-over-quarter volatility. Maybe it's because they're totally saturated here in North America, right? Stock's been selling off, hasn't made a new high in line with the NASDAQ and the S&P, I want to say in 6 months. Now the stock's down a lot. They make this bid for Warner, and you start saying to yourself, okay, what's going on there? I don't know if you watch this Stranger Things, Guy. It's an abomination. It literally is like the worst piece of shit I've ever seen on TV. A. B, I just saw last night during an NFL game, I saw the first commercial for Netflix on TV that I've ever seen. Have you ever seen a commercial for Netflix?
I'd have to go through the Rolodex of my mind to think about it, but
Well, the one thing I'm going to tell you is the moment you started seeing, listen to this, ads for Tesla and ads for Starbucks on TV, it was literally preceding a very nasty move in the stock for a while. But more importantly, in the company, in their business. And I'm being really serious. Like Starbucks had never advertised on TV. Tesla had never advertised on TV, and both of their businesses were shitty and getting worse.
Wow, that's a Merry Christmas, everybody. I mean, that's
you know what that is? Stuff. That's my rant against consumerism, people. Okay, just make do. You know what? Maybe don't buy 37 pencils, Guy, or maybe don't buy your kid $10.
I see what you did there. All right, so let's go back since we were talking about Netflix, and this is a static chart. But if you go back to June of this year, when they reported earnings, we had Tom Rogers on Fast Money that evening. And by the way, at the time, into earnings, the stock was making an all-time high. I think it was north of 133 or so. Tom came on and said that, that they saw some things in the quarter that were concerning to him, some things that he was worried about going forward for the stock. And this is, by the way, a man that had been bullish in the name for years prior. And as we said that night, that was the first time I heard him with some trepidation in his voice, and that proved to be correct. And then obviously, when the news came out that they were considering a bid for Warner Brothers Discovery, I made a comment that probably doesn't augur particularly well, because what that suggests is maybe the growth phase is over and they're going to have to start doing some acquisitions, which I don't think the street is going to like. And that was actually correct, the assessment. Now, here we are, not approaching, but getting close to the levels that we saw in the April low. I think the stock got down to about 82 and change on that April sell-off, which, by the way, was another one of the downdrafts we've seen in the name. I think prior to that, the stock made an all-time high in February of about 106. So this move is concerning not only because of the drop, but the duration of the drop. I mean, we're talking about almost 6 months now where you've seen a couple of upticks, but we're basically at the lows we've seen in quite some time.
Yeah, but back this out a couple years, because Guy, you and I made this point, of all the mega cap tech stocks, okay, that got nailed in April, everything got nailed, right, in early April. This was literally one of the only names on my screen that didn't break its 200-day moving average to the downside, and that was showing amazing relative strength. Now, obviously, you saw that bounce from those April lows. I mean, that was one of the bigger bounces that we've seen. What would it go from 75 to 135 or something like that? And it didn't really seem to be tracking fundamentals, right? But that's fine. So you can say to yourself, well, here we are. We haven't retraced that whole move. No big deal. To me, I think this is getting really close, Guy, to a buy no matter what happens. Let's say Paramount wins this and who knows the timing of this. It's going to be ugly, I think, for the next few months. Does that make sense? But let's just say that what are the prediction markets saying, actually, Jacob? Can you go check that out? Because that's got to be there. Not that I care that much about that. But, Guy, look at this, okay? From an earnings standpoint, last year in 2024, they earned $2.05. 2023, $1.35. This year is expected to be 256. Okay, that would be up 25%. Is that right? No. Year over. No, it's 10% year over year. I don't know why that's coming in. Okay, so then 2026 expected to be 326.
Mm-hmm.
So if you think about that, mid-teens revenue growth, but more importantly, what I'd say,
probably trading at 29, 30 times next year's numbers ish.
29 next year. But here's the kicker. So in 24, 46% gross margins, that was up from 41.5 in 23. Now this year is supposed to be 48.3. Next year, 50.7. So you look at this company that's growing earnings, right? Let's call it 20-ish% a year, growing sales 13, 14, let's call it mid-teens, with margins that are growing. This is going to be the highest margin the first time ever above 50% for a company that actually has, like a material expense in acquiring content, creating content, all that sort of thing. You'd say to yourself, this looks good right here.
Yeah.
I mean,
I agree with you. And I'll say this. I mean, I don't know if we're going to get to the April low or not. The fact that we've obviously breached the 200-day moving average is concerning. 200-day moving average flattening out for the first time. You pointed out that in this entire run higher from April of 2024, a year and a half or so ago, it never really got through the 200-day. Obviously, we're through it now. Yeah. What I think could happen is similar to what we saw on Facebook in terms of you had this huge downdraft. And this is recent, by the way. Pull up a Facebook chart. The stock sold off for a myriad of different reasons. I think the spend concerned people. And then people said, wait a second, it's friggin' Facebook. I mean, it's gotten way ahead of itself. We broke the 200-day for the first time in a while. Again, much like Netflix. Then I think people said, well, this is still a great business. Now the valuation is actually interesting. Then the stock went on to make an all-time high before selling off recently. My point is, if you just look at that Facebook move into basically 2025, you saw what we did in April, and then the market said, wait a second, something's wrong here. This is Facebook after all. And then you saw the subsequent move. I think in terms of breaching the 200-day and then the subsequent rally, I think that's what we could see in Netflix early next year.
Yeah. This is one I find interesting. I think that probably a lot of, bad news is discounted and the uncertainty is obviously around this Paramount bid and all that sort of stuff, which actually, if they end up winning the bid, puts the stock in some sort of stasis for a while. Look at this.
Nice word.
This is Kalshi, who will successfully. So what are we looking at? Netflix, 42%, Paramount. I mean, interesting.
Can we say, hold on first? I just want to, what do they call it when you get behind the fourth wall or something?
You break the fourth wall.
Yeah. So people will notice that from time to time, I'll look to my right because that's where I field the questions and stuff and different things. But we have a group text here at Risk Reversal Media. Amanda's on it. Timmy's on it. Jacob's on it. Bill's on it. You're on it. I'm on it. Cece's on it.
Yeah.
I mean, did I mention? I think I mentioned everybody.
Yeah.
Guy Adami loves Stranger Things. That's from Amanda. That's true. I do love Stranger Things. Tim Adami, literally the worst show on television right now.
Thank you, Timmy.
I have never seen it, obviously, from Amanda. I love Stranger. I enjoy it.
You love the
You know
first
why? Because it's an 80s thing. And I'm obviously.
And they do retro. They have done retro better than anybody. Maybe as good as, what was that show with the Americans with the K or something like that? The KKK. It's an abomination. I mean, I can't even tell. All right, so Guy, we want to hit some macro stuff. Rosie has some great stuff.
We just call him Rosie. Oh, you just said that.
Yeah, we just call him Rosie.
That's David Rosenberg.
I want to hit some Michael Burry stuff. Well, we'll get that in a second. But this is something in my email box, and Guy, there's a lot of famous New York Yankee catchers. You might have been fond of Jim Leyritz back in 1996.
No, I mean, don't stop for a second. Okay, just hold on 1 second. Do not put Jim Leyritz in the pantheon.
Hold on, he might have hit one
of Yankee catchers.
He might have hit one of the most important.
Because Mark Wohlers, who was throwing friggin' BBs, decided to hang a slider in a count that he shouldn't have been throwing a slider.
Okay.
And Leyritz got on top of it. Yes, absolutely.
And
I remember it like yesterday. Do you remember his Mark Wohlers? That was a great call by me.
And the Yankees were down how many games? This was
they were down 2-0. Joe Torre went into George Steinbrenner's office, said, "Don't worry, boss. We're going to go back to Atlanta. We're going to win those games. We're going to come home and win it in 4 straight." And he was right.
They were down.
By the way, the Yankees won 12 straight World Series games.
I know.
Think about that.
So they beat in 96, then in 90, in 97,
San Diego was, I think, 99, 98. I don't know. Anyway.
Whatever. But
I think they won 12 straight World Series games.
They were down in game 3, and Leyritz, the most unlikely guy, it's kind of like an Aaron Boone home run in the 2003, ALCS game 7, which I was at, which is amazing. Okay, so let's move on from Jim Leyritz.
No. That's for a second. Thank you for mentioning Yankee catchers. Obviously, you have to start with Bill Dickey, who was as great a catcher as anybody in the Hall of Fame. Then you move on. He passed the torch to Yogi Berra, who subsequently passed the torch to Elston Howard, who subsequently, in some ways, passed the torch to the great Thurman Munson. I can go on here, by the way. Yeah. Posada's obviously in that group.
Well, I was going to hip hop Jorge. He was going to be next. I mean, we dig Posada.
Thurman Munson might still be, to this day, my favorite Yankee of all time.
I told you his daughter was my lab partner my freshman year.
August 2nd, 1978 or 79, I guess.
Yeah, he wasn't he flying home in the middle.
I believe it was a Wednesday. They had a couple off days, and he was flying. His family lived in Ohio. He probably flying a plane that he was not qualified to fly. Blah blah blah.
Correct. So our friend Doug Cass.
I just gave you the date of the. It's pretty amazing.
Our friend Doug Cass of thestreetbro.com. He has a great column this morning, and this is where I was going. The future ain't what it used to be. Okay, that was Yogi Berra. Like, the Yogiisms are amazing. Doug could probably rattle off 30 of them, right? So this note,
nobody goes to that restaurant anymore. It's too crowded. Yeah, see, that's actually a really good one.
So many. But this is important, I think, and maybe we can get the link and put it in the show notes, because Doug's he's reviewing a bunch of themes as it relates to the markets, as it relates to equity risk premium. These are things we've been talking about all year. CAPE ratios, things that most people don't give a shit about. The composition of equity returns, margin debt. The list goes on. It's a great post. Let's get a link and we'll put it in there. And it just, this is the time of year. I think it makes sense to think about some of these things. Now, getting to Rosie Guy. So maybe they can pull this up this morning, because these are themes that he is hitting on that are things that I know that you and Doug have focused on. Let's see if we can blow this up a little bit. So I think the first point here, Guy, is really interesting to me, the dollar weakness. So let's scroll it for a sec, please. So look at this. The trade-weighted U.S. dollar ending the year down 7%. That means that almost half of the gain in the S&P 500 was pure money illusion from the depreciation of the big dollar. In fact, if you are a European-based investor, you have made in the broad U.S. market. So far this year is barely more than 3.5%. Obviously, we have an S&P that's up 17.5%. So you would have done better rolling over to T-bills. Speak to me about
Well, I mean, the dollar weakness is something that's, I think it's going to continue. It obviously took a pause late summer into the fall. By the way, you thought it would, and Carter did as well. We charted it and we traded a bounce in the dollar. But I think what we're seeing now is a reacceleration to the downside. And as usual, Rosie's smart to point this out. I mean, the dollar erosion makes assets just look like they're going higher. But if you really then look under the hood, it's not exactly what it appears to be. And obviously, one of the reasons that gold's done as well as it has is in part due to that weaker dollar. And I think, by the way, just my view, I think that's going to continue into this year. I think there's a chance that the euro, if I don't know if Amanda can put that up or not, which is probably trading about, I think, 117 and change, 117.80 or so. I think that's headed to 125. So I think the dollar weakens against the euro. Dollar yen is its own animal, so I don't want to sort of get bogged down in that real quick. That's got its own situations, but dollar weakness is going to continue to be a theme. And by the way, that's by design. Let's not pretend, as much as people talk about a strong dollar policy, when you're $38 trillion in the hole, it actually behooves you to have a weaker currency.
Yeah, I mean, you could also make the case, Guy, that it's a tailwind for U.S. multinationals, right? Too. So, and that, to your point, is also by design, right? And so, it's worth throwing that out there. The other one I think is really interesting. So, on passive investing, this is something that obviously you and Doug,
a lot of people started writing about in the fall.
Yep.
Torsten Slock, I believe, was one of the people. By the back to you.
Was in a tempestuous. Can you say that?
I don't know what you're trying to say.
In a sign of these tempestuous, throw caution to the wind times and find ourselves in the U.S. retail investors yanked $1 trillion out of actively managed equity funds in 2025, the 11th consecutive year of redemptions, and plowed $600 billion in passive index investing. The dangers for any stock picker grow when the S&P 500 is 40% dominated by the 10 mega cap growth stocks because of this intense concentration, which surpasses what we experienced in the late 90s. Only 27% of active fund managers managed to beat the index this year. There are vagaries of managing risk. Now, really quickly, Guy, I mean, if you are not beating the benchmarks, I think a lot of investors are getting hip to the fact that why would you pay really high fees when
no reason to
exposure, right?
By the way, there'll be people that read that and say this is a good thing because that passive money, it's exactly that. As long as money's flowing in, there's no reason to be concerned. And passive investing has a way to sort of, I don't know, gloss over any of the things that we talk about. You mentioned CAPE ratios. Passive investing doesn't care. You mentioned S&P 500 trading 22.5, 23 times. Passive doesn't care. You mentioned the fact that it's basically driven by 8 to 10 different stocks. They care nothing about these things. Money flows regardless. Now, of course, the problem with that is, and we've said it a number of times, passive is great, but when passive does become active, it's typically not on the way up. And it has a way of shaking people out. And when everybody races for that exit door, which we have seen before, it's not an orderly exit. Let's put it that way. Everybody's a gentleman on the way in the passive world. People don't want to be gentlemanly on the way out. And that should be some of the concerns because, again, you have no valuation cushion whatsoever in this market.
Yeah, I mean, you say this all the time. I mean, passive gets active, right? And go back and look at April. I mean, correlations.
Yeah, that's a great example.
And a lot of these models, they just sell. It is what it is. Let's just hit growth for a second because I was reading a lot over the last week or so. A lot of this GDP number came out. The president seems pretty excited about it. They don't seem to worry too much about the unemployment number ticking up to 4.6%. I mean, a lot of things can be true at the same time. You can have accelerating growth, and you could listen. I just read an article in the Journal this morning. It was talking about PhDs, biotech PhDs or whatever, who can't get jobs, who are on food assistance. You know what I mean? There's just so much disruption going on, and you just keep reading about it. And there's not data right now that you can put your finger on and talk about these knowledge jobs being displaced. But there was also an article in the Wall Street Journal talking about 2026 hiring plans for corporate America, and it says they don't plan to do a lot of hiring. You know what I mean? So like that is not good, in my opinion, for that unemployment rate.
No, I agree with that. And the optimists will say the reason why the unemployment rate is going higher is because more people are putting themselves back in the labor market. So the more people looking for a job. Again, you can make these numbers look like whatever you want them to look like. The reality is the unemployment rate is going higher. I think we can all agree on that. It is what it is, as Jim Riley, who I worked for at J. Aaron, used to say. Dan met him, by the way, in Florida.
Great,
but
man.
this is the important part. Isn't that a podcast by Liz Thomas, The Important Part?
Yeah, it's SoFi.com. You can go to SoFi.com/Liz.
Yeah, you can.
Well, in a week you can
Anyway,
/Liz and get the Important Part podcast.
The GDP print was so skewed. Again, I'm not a hater. I'm not, because I don't care who's in office. But the biggest component of the GDP print was basically healthcare costs. And I don't think that's necessarily what you want to see the growth on the back of. And that speaks to, again, people feeling strapped. So it all does come back to the consumer at one point. And you mentioned, again, the unemployment rate starting to tick higher. Inflation is still a problem. It's not, wage growth is not keeping pace regardless of what you hear. And then a GDP print that's hot, that's great, except that the hotness was created on the back of the consumer in the form of healthcare costs, which is not a good thing in my opinion.
Well, in a lot. All right. So Rosie makes this point, the AI build out is huge, right? The high end consumer,
a huge part of it too.
Huge, right? So lower imports, we know what's going on there. I mean, like some of these things, if you think about it, seem kind of obvious. And I think it was something that we picked up, maybe it was Torsten Slack from Apollo also, that for the first time ever, the GDP growth, which obviously as consumers, 2/3 of GDP in general, but AI growth matched that of the consumer in that GDP print. That was earlier in this year. So when I think about this number, you can cherry pick, like okay, have a ball. But the one thing I'd say about the healthcare stuff, Guy, a lot of folks keep saying that, or economists, that there's going to be a huge tailwind by the tax cuts next year. Now there's the corporate aspect where you can depreciate, a bunch of capex like right away, which will hopefully, make it, I don't know. Listen, less tax receipts, but more spending by the corporates. But if they're not hiring, okay, that's the other thing. But make no mistake about it. If you just do the math, if the lower end, mid to lower end consumer is having a hard time, and they are the ones that are going to be most adversely affected by healthcare premiums going higher, having to make decisions about paying for insurance for their family, or having to cut back in other areas like food and this and that, or whatever, so I mean, that is going to offset, in 100%, my opinion, any enthusiasm you have about these tailwinds about the economy.
There's nothing funny about any of what I'm about to say, but we have said this for years, that this sort of gap between the have and the have-nots in the biggest economy in the history of planet Earth is continuing to widen. By the way, that's the United States, in case you were wondering. And now more and more people are starting to talk about it. As a matter of fact, Scott Bessent was talking about it recently, about how, the middle and the lower end are just getting squeezed. And that's not getting any better anytime soon. And, that's not, in my opinion, the sign of a particularly healthy economy, when 70% of the economy is driven by people having to spend on things. Now, the spend is there. I saw Brian Moynihan yesterday on Margaret Brennan's show, I think it's Meet the Press. And I'll say it again, one of the least impressive people that I've seen in a seat of that capacity. But he sugarcoats a lot of this stuff, but he was actually somewhat quick to point out that it's somewhat skewed the economy, and that the middle, lower end are absolutely having issues. And that at some point works its way into the broader economy, that in some way works itself into the stock market. Now, I'm shocked that we haven't seen it yet, but again, it's not getting better, it's getting worse. Again, my opinion.
By the way, Scott Bessent is one of the least impressive people talking about markets, talking about the economy, talking about, like, I'm like flabbergasted every time. He was on Meet the Press a few weeks ago. By the way, that's with what's her name? Meet the Press is NBC.
Margaret Brennan shows Welker, whatever.
Welker. I mean, well, I'm just Guy.
Yes, you're right. Kristen Welker is, I guess, Meet the Press. So what is with Margaret is
probably ABC, I think.
No, Margaret's CBS.
Yeah. So I
got to look at. Okay, keep talking. Now I got to look.
It might be CBS. But the point that I wanted to make about the GDP and employment and what are the tailwinds and this or whatever. If you lower interest rates, that makes the cost of AI build outs that much easier. We're already starting to hear that a lot of these hyperscalers, we've been talking about it, how they're basically trying to do all these debt deals off balance sheet, right?
Face the Nation. Sorry. That's Margaret's show.
Well, you didn't say whether it's ABC or CBS.
Margaret, I think, is CBS. That's Face the Nation.
What's
Meet
ABC?
the Press is
NBC.
NBC, and then Stephanopoulos, I think, is ABC.
ABC. Okay. So my point is, lower interest rates doesn't fix any of this. Okay.
No.
Because if it's cheaper to do the AI build out, and the AI build out, which is causing energy costs to go higher for consumers. So if you have higher healthcare costs, you have higher energy, those costs, energy costs, are not something, they're not negotiable. You can miss your car payment, and you know what? You'll get backed up. Or
you can't go to the gas station and negotiate with the guy pumping your gas.
Or the electric company, or the water. Listen, but my point is like, I think that all these rosy, like if people want to point to this, listen, and I'm not hating, I hope the economy hangs in there. I hope we don't have a recession. I don't even need the stock market, to do anything like it did before. I'd like to see a little fear put in it. And this takes me to, if the guys can, or the gals, or whoever's doing it, can pull up the VIX guy. The VIX melted in this last week.
Well, it makes sense given the holiday shortened weeks we're seeing.
But
nothing really happened.
But
people
it fell off.
Forward.
Look at that. It just literally traded at new 52-week lows. Okay. So there is some technical things like you're talking about, 2 holiday shortened weeks, a market that's just hanging around the all-time highs, no news. It is interesting to look at that 200-day guy. It's just flatline there at 19. So we've had some spikes here, but we had this long period where it banged around in the mid-teens, that sort of thing. We had a couple of the spikes. Now here we are at 52-week lows. The one thing I'll say to you is that if you're going into 2026, and you feel all geeked up about all this stuff that's going to continue to go. We had 23 up 25%. We had 24 up 25%. Right now we're up 17% in the S&P 500. It seems like we are in the middle of a rip-roaring bull market, no doubt about it. But we have only had a couple 5% sell-off since April. At some point, there's going to be a correction. Do you agree?
I agree. No, look, and valuations do matter at a certain point. And I'm glad you mentioned the CAPE ratio, which is cyclically adjusted price to earnings, which nobody wants to talk about. But we're approaching, I think, the second highest reading in history. And history is, in fact, a long time. A market, again, that's trading north of 22.5, 23 times forward earnings, which is historically very expensive. The fact that Warren Buffett's Berkshire Hathaway has about $380 billion of cash sitting on their balance sheet waiting for something, the Buffett indicator at historic highs. All these things continue to flash red. Then you have the macro things that we were talking about, throw a little geopolitical risk in it, and you have a VIX that, in my opinion, is way too low. Before we get to a Palantir chart, I want to mention one thing, Dan, and you talked about it at the top of the show. With Fidelity Trader Plus, and this is important, I think, in 26, you can customize your chart or start a trade on your desktop, set up at home, and pull it up on your phone or laptop at work. Set it up on your desktop, take a look at it on your phone later in the day. Fidelity built their new advanced trading platform from the ground up with better connectivity and more powerful tools than ever before. Traders can make smarter, faster trade decisions from anywhere. Try the all-new Fidelity Trader Plus, the next generation of advanced trading from Fidelity. Back to you.
Thank you, brother. Just a couple things. I want to make sure, and I don't want to do it right now. I want to hit China and some of the things there, and I want to hit gold, Bitcoin, silver, and crude. Okay, so let's just remember, people. Let's do that.
Rip through it.
Okay, that'll be our speed round. So Palantir. Now you've heard me say. Can we use the F word here?
No, because our today's sponsor might not. Be
okay.
particularly happy.
Palantir to me is one of the dumbest freaking stocks that I've ever seen in nearly 30 years in the stock market. I can give you a whole host of reasons. You've heard them all. It literally makes absolutely zero sense where this stock is trading. It's multiple based on what it's trading on, what investors are willing to assign a multiple for the business that they get from the government. I could go on and on and on and on. Okay. So Michael Burry of Big Short fame, he's become really famous, okay, over the last, I want to call it few years about making these big market, kind of, I don't know, proclamations or whatever. And now he's gotten a bit more specific to stocks. This article yesterday in the Wall Street Journal was really interesting to me. And it almost feels like maybe this is a contraindicator in a way. It's talking about things we already know about, these big bets. Now, it was ridiculous that some of the major news networks were reporting that he made like $1 billion bet against, this and that or whatever. And if you actually do some math and you look at, you know what I mean? Like what notional was, because he's doing a lot with options. I mean, it makes no sense that he's literally long shit ton of the, 2-year out 50 puts in Palantir. Makes no sense. I mean, to me, excuse me, those are like lotto tickets. They have like low single digit probabilities of being in them. That's not, to me, making a great bet against this. But let's go to Palantir in general. And he's laid out his bear case. We've been doing it for a very long time. He's a bit more important to us or than us. This is just technicals. You see what's going on there. You see what that 200-day moving average is. It's right below 150. You see that's right near the the lows from this fall, which also were, much higher than those April lows. Okay. So forget valuation, forget all that sort of stuff. Go back to that Burry article for a second. This to me is actually one of the most important things, forget valuation fundamentals. Okay. So Alex Karp, Dr. Karp, as you like to refer to him, Guy,
Well,
who's the CEO.
He likes to refer to himself as Dr. Karp.
He does. And he might be brilliant. He might be not. But if this guy, Dr. Karp, is calling Michael Burry batshit crazy on CNBC, and then he goes down and you can see some of the stuff, like when you're doing that, you're probably doing things wrong. You're a gazillionaire. You know what I mean? Like you won for now. You know what I mean? Like the fact that you can't have anybody come at you and come at your company and come at the contracts and come at the valuation and come, like, that's saying something to me, guys.
Yeah, I agree. I agree with that. And we've seen it before, and it speaks to a number of different things. I think one of the things it speaks to is being pretty thin-skinned, but having that sort of defense mechanism. And you pointed it out in a recent back and forth that you flagged a month or so ago, when I think it was a guy from OpenAI talked about, if you want to sell your stock, it was to Brad Gerstner, right?
Yeah.
I'll buy everything you want type of thing. And it's those types of responses that I think should make your ears peak up a little bit or perk up a little bit. And, the right response here is, we respect all investors have their opinions on our company. We obviously have a different view than Mr. Burry. We don't think he's going to be right, but as you say, have at it. But calling somebody batshit crazy, I mean, I think that speaks to that should be concerning to people in some way, shape, or form.
Well, I mean, really, what it does, and a lot of Americans, so Burry on this podcast that he did with Michael Lewis, who obviously is the author of The Big Short. He had this. He said, "There's more." You ready for this? There's more billionaires that were made or have been minted from the appreciation in Palantir stock than they have in revenue in a year. Now, that might be dumb. Maybe I don't know if that's dumb.
No, I mean, but it's fair. I mean, what are they going to do? $6 billion of revenue? I mean, is that right? I mean, look at the out year. I think I'm right. And it's a company that's trading $450 billion market cap. I mean, just in my opinion, I mean, and let's say it's a little bit different this time, but to justify that market cap, I think you have to have at least an $80 billion revenue run rate. And they're nowhere near that.
Yeah. I mean, listen, this is a company, to your point, it's trading at a market cap or has a market cap. I mean, they're going to do, to your point, on a GAAP basis, they're barely even making any money. I just want to be really clear on that. Okay. So 57 cents a share. And so net income, in dollar terms, 1.5 billion this year on a revenue base of, let's say, 4.5 or something like that. So, I mean, they're profitable, but, trading at 100 times sales this year, 70 times next, it just, it can't stand. And, the other thing, Guy, and he highlights, scroll down a little bit, just their dependency on government contracts, these are generally not like, these are the worst margin contracts you can have, right? And so he's talking about fierce competition from IBM. So it is what it is. I mean, like, I'm rooting against Dr. Karp because I don't believe anything that they do. They're going to say they're doing God's work because they're helping, the U.S. government, get better at AI. They have this AI. Who gives a shit? I mean, like, I don't mean who gives a shit about that. Like, there are, what do they say? Like, the government usually, I mean, these are not great margins.
No, and if you remember, I mean, for you fast money fans out there, remember a few years ago, the P in my hope trade was in fact Palantir, and that's when it was like a $20 stock, and I liked it because they were getting away from government contracts, getting into more medium and small businesses, which they needed to have that mix. But in my wildest dreams, I mean, I thought maybe it could go to like 35 or 40. I didn't think it was going to where it's trading now, obviously. Otherwise, I would have bought the stock then, and you probably wouldn't be seeing me right now. But with all that said, their business mix is better, but it's not nearly where it should be. And your point about margins, they want, that's one of the reasons they want to get away from government contracts. And I'll say this: when you start to talk about doing God's work, Lloyd Blankfein made a similar comment many years ago, and that didn't age particularly well.
Yeah. Doug also highlights that there's a ton of insider selling of late.
Shit, I'd be doing the same thing.
Listen, their kids need braces. You know what I mean? Like, they gotta,
they
like,
buy sneakers too.
Yeah. They got to make sure they got the funds to put those braces on those kids, and send them to school and
that's
tuition.
A Michael Jordan line, by the way.
Yeah, well, it's been attributed to him why he never made.
No, he did say it. He said it on the bus. I mean,
he said Republicans buy sneakers too.
Yeah.
So that's why he's not going to get in the mix of any of that. I just, I think that these are the sorts of stories, though, Guy, and these are the sorts of emotions, like NVIDIA, Burry's made a lot of claims, as our friend Jim Chanos has, about the depreciation. Doug has schedules that a lot of these hyperscalers, a lot of these folks that buy these GPUs, they're not actually looking. This is also a head and shoulders. I mean, this thing's going to its 200-day moving average. So have a ball there, people, 160. And that's also that breakout level, right, that we've talked about. But they've come out and vehemently denied, the depreciation schedules and this, that, or whatever. But there is something to be said that NVIDIA, which makes the chips, they sell them to these, neo clouds and these hyperscalers, and then they don't even want to own the chips on their balance sheet that they use. They rent the compute back from what's it called, CoreWeave, which they are huge investors in. You know what I mean? Like, to me, there's definitely some shady shit going on.
You were going to say Fugazi.
Yeah, Fugazi.
Okay, before we get into the non-Fugazi, and that's Thorpe Gold chart, because as we say, there's a lot happening in gold now. Today, it's obviously having a bit of a sell-off, which I totally get. Listen, I think there was some news over the weekend. Silver's come off. You read about banks failing, and which is complete nonsense, by the way. So I think what we're seeing here is just a normal, probably profit take in terms of year-end stuff. So there you go. That silver chart could potentially be a little bit concerning, because what you're looking at there is a gap island reversal, and that's happening at an all-time high. So be completely cognizant of that one, because that's sticking out like a sore thumb. So, maybe silver back and fills all the way back down to $60 or mid 50s. But with that said, taking gold out with it today, I get it, but the gold trade's not over in any way, shape, or form. And I think in some ways you're actually happy this is happening today. You're getting this bit of a sell-off, more than a bit. Pretty significant sell-off. So the uptrend is still intact. I think this is on the back of some silver, some year-end whatever. But I don't think this is changing anytime soon.
Well, I don't think it's bullish for market sentiment.
No, I agree with that too, by the way.
Go back to silver for a second. I mean, this has really captivated a lot of folks that we know in the markets. And when you see those sorts of, you see articles in the journal, Widowmaker, and, all this sort of stuff. I mean, like, to me, you could say that breakout was a bit orderly, consolidated, this, that, whatever. But obviously it went from $50 to 60. That seemed a bit overdone. And then you get to 70, and then you go from 70 to 80 in like one trading day or whatever. Like, that is the sort of behavior that has the ability to spill over that volatility into other risk assets. And just let's look at Bitcoin for a second here, because, I woke up this morning and I saw it up, a few percent And
I
then
woke up this morning, the house was cold.
I'll turn the heat up, dude.
No, that's
lyric,
a
obviously.
lyric from Bruce Springsteen.
What song?
It's off Tunnel of Love LP.
Well,
back to you.
Very few people quote songs from Tunnel of Love. One step forward, two steps back.
Yeah.
Tunnel of Love is a horrible song. Let's be honest.
Tunnel of Love's not a great song. Tougher Than the Rest, which is off that album, is a great song.
Yeah, it's, you know what? That album forced him to get back together with the E Street Band.
Well, sometimes you need to take a break and, explore things.
You know what? You know where that album was? It was when he had that he married that woman who was like a model. Remember her? And then he got back. I think he and Patti Scialfa got together when they were doing Lucky Town. And what was the other album? It was like two double, and I got to tell you, I am not a fan generally of the double album release. So Lucky Town, and what was the other one? Somebody will come up with it.
The River?
No. It was at the same time in like 1990, 91.
Wasn't Nebraska?
No. That came out 10 years earlier, and I think 80, 81. So hold on. Lucky Town, Bruce Springsteen. I saw him on this tour at Syracuse University at the Carrier Dome. Bruce Springsteen. There was 2 albums, and they should Lucky Town. You ready? Hold on. It'll come out.
I'm right here. Maybe go to one of those Chat GBT things.
Better Local Hero. This was a good album, by the way. Better Days, Lucky Town, Local Hero, If I Should Fall Behind, Leap of Faith, The Big Muddy. That song kind of sucked. But there was another album. What was the other one? Come on, Jake. Oh, Human Touch and Lucky Town. Okay. They came out together. Now, what I believe should have been done, I believe they should have put one album out, maybe done like 15 songs, right? And that way, and you know who else did this around the same exact time about a year before? Use Your Illusion. This was
the Guns N' Roses.
The Guns N' Roses. So really quickly on this, Human Touch was okay. Soul Driver, 57 Channels sucks. Cross My Heart, Gloria's Eyes, With Every Wish. Like this should have been one long album, but they did 2. And I don't know why you would do that, because Human Touch kind of sucked. Lucky Town was better. Use Your Illusion 1 and 2. Okay, let's just make one album though. You know what? If someone in the chat wants to put super albums of the Guns N' Roses and then the Bruce Springsteen, Human Touch, and Lucky Town, just make one album of those 2. We can grade those. All right. So you're the one who came up with the lyric. I mean,
you woke up this morning and that's what popped into my head.
All right, so Bitcoin was moving around, and this is one where we've talked about the lack of bounce here. Like you used to have this correlation of the NASDAQ. I mean, this is saying something to me. It's saying something, Guy, more about the Treasury trade, which to me is totally stupid.
Now, and I'm going to probably go a couple standard deviations away, but you mentioned the Treasury trade and then these stable coins. It's all part and parcel. And I think one of the tenets of the bull case for the bond market is the fact that these stable coins are constructed in such a way that they're going to create demand for treasuries. So theoretically, they could help interest rates go lower. The problem, of course, is, and you brought it up, that if things start to break the buck, that becomes problematic. And then you throw in the fact that there's really no meaningful bounce at all in Bitcoin. And, it's bounced. Listen, it went from 81,000 to 95,000, but, we're muddling around here in the high 80s. And I think that's problematic. And I'll say again, I do think we're going to test the levels of the average price that Strategy owns their Bitcoin, which is about 75,000. And then I think you're going to see a serious risk-off situation where not only does Bitcoin potentially unwind, but I think the trade in AI and in NASDAQ specifically starts to unwind as well, because I think there's a huge overlap of investment community there.
Yeah, and you mentioned stable coins. If these guys can pull up this article from The Information yesterday, JP Morgan shut down. Look at this. Doing business with 2 startups that offer stable coins because of who they're doing business with. And if you want to just scroll through this thing, I mean, man, like this is the argument that people were having about Bitcoin, 10 years ago, right? About Silk Road and and just, using stable coins to get around KYC. I mean, this is the issue. These startups were actually basically using it as part of their sales pitch. the know your customer stuff. We'll get around that. You want to do business in a dollar back sort of thing that works on rails of I mean, this is gonna. I've been saying this for a while. These stable coins are gonna be a problem. They're gonna be a problem, because right now in the U.S. we're pretty well banked. Things work pretty well. People say, "Oh, it's slow. It costs a lot." ACH, T+1 or 3 or this and whatever. It's stocks, bond. It works fine, people. Okay, this is to me, this is like a solution in search of a problem right now.
I agree with that. I've said that too, but there are other people that feel differently. But let's see how this thing plays out. There are definitely concerns around the whole stablecoin crypto universe right now that I don't think enough people are paying attention to.
Yeah. Well, I just think the volatility in all these, what we just talked about in silver, gold, Bitcoin, the US dollar weakness, all that sort of stuff. I mean, to me, US dollar weakness should be bullish for Bitcoin. It is not, which is telling me that there's other things going on here. And you just mentioned the treasury things. I think in 2026, and I don't do predictions. Doug's got his 2026 predictions coming out. I'm sure there's going to be something around this, but I think that these treasury companies are going to be bad. And I think these stable coins are, when I say bad, I think there's going to be some problems. I think we're probably going to have an FTX moment. A lot of you guys, you want to at me, I'm on the Twitters or this and that, whatever, have a ball. And you could say, well, you don't know what you're talking about. We've seen this stuff. It rhymes and it rhymes and it rhymes. And, crypto has rhymed every 4 years or so. You know what I mean? If you think about it. All right. Lastly, China guy. So, the Chinese, there's 2 headlines that I saw in the last couple of days. They're doing some, military operations or whatever. Like, what do they call them? I'm totally spacing right here.
Exercises.
They're doing exercises. You and I have been talking about it. We've been reading a bunch of stuff, man. Like, there was an article in the Wall Street Journal a couple of weeks ago talking about what an invasion would look like of China into Taiwan. And by no means does it look like it's a cakewalk. I mean, it almost looks about like if you thought, well, they could just roll in there. They could, they've got this amazing Navy and then this and that or whatever. It's not too different than thinking about the Russians like rolling into, Ukraine and that sort of thing. So they could get bogged down, but they're talking about doing exercises. They're talking about doing, like stimulating growth in the country. It sounds like they, and by all means, like when you look at, we had Louis Vincent Gav on the podcast a couple of weeks ago on Risk Reversal podcast, and he came on in September. He's like saying to me, and he's in Hong Kong, but he's not like, a China file or anything. He's like, the Chinese won the trade war. Like it's over. Like they won. And, they were able to kind of dampen the tension or whatever, but they still have the rare earths. They still have the magnets. They still have the buyers of soybeans. You know what I mean? Like, what do we want to do? We want to sell them our NVIDIA chips. Well, they're working away. And I'm not rooting for China at all. I'm not in favor of selling them our GPUs, even if they're not our best GPUs. And you could say, well, these guys, their companies are backed by the government and they're subsidizing the development of the things that they need. And in the near term, if the Trump administration wants to take a VIG, because I love taking VIGs, you got the tariffs, they're rolling in it. Oh, you know what they're going to do? They're actually going to take part of that $200 billion and give them right back to the farmers. The farmers that are going out of business because they can't sell their soybeans overseas because the Chinese buy 30% of our soybeans, but they can't sell them because we're in the middle of a trade war. So let's take in some of those tariffs and let's give them straight to the farmers, the big farmers. The small farmers, they go out of business, sadly. But the big farmers, the ones that have the big lobbies, that give the money right into Washington.
They have lobbies. I mean, you would think that of all the things they had to do, constructing a lobby in the middle of the barn is probably not high on the list. But sometimes a nice lobby, it really is a way when you walk in to get a feel for the company.
Are you a favor of having like a mudroom off the lobby, or does the mudroom come in like next?
No, the mudroom has to be like by where the laundry room is.
But you get my point here.
Yeah.
So the Chinese are trying military exercises, right? They are, for all intents and purposes, they have a lot of leverage. They also have the ability to stimulate their economy. And the whole idea that we try to stimulate our economy was only going to cause inflation. They're worried about deflation, right? You know what I mean? I just listen again.
It's fair. It's a fair point, and it's obviously I've had that concern for years now, and that concern, if I made all decisions based on that concern, you would have missed a ridiculous rally in a lot of different things. But the concern hasn't gone away. You can go back and look. Jensen Huang, it was about a year and a half, maybe 2 years ago, outwardly talked about the existential risk to not only his business, but the semiconductor industry and potentially the broader market was exactly what you're talking about now. And again, it hasn't gone away. And the question is, whether or not China does or just a blockade, it's really what our response is. And my sense is there will be no response from the United States whatsoever. That's just my instinct. We'll see.
So there was, I know we're going to get out of here in a sec. So a few quarters ago, Jensen was squirmy. You remember they took, I don't know if they took a charge. I think they did take a $5 billion charge for against sales.
Right.
Okay. So there's an argument to be made, and you cannot put your finger on it right now. And NVIDIA came out and said they didn't think it was like a big deal because they have a very good handle over their channel of where they sell chips, to foreign, governments or entities or whatever. And you remember that story a couple of weeks ago saying that a lot of Chinese are training their models offshore in Singapore and, other places. Well, maybe that's the China demand, but not from China. You know what I mean? Maybe those sales are being registered, but they're not being registered from China buyers. They're being registered by companies that have neoclouds or, that sort of thing offshore. And that's where they're training these models, So maybe all of a sudden there's not going to be some huge uptick in buying of NVIDIA GPUs, even if we restrict or we lift the restrictions on exports. You know what I mean? So I don't know. I just feel like NVIDIA is one that, at some point, I think it's going to be very obvious what is going on, what the need are for these chips. They're making this deal, $20 billion, guy, to buy IP from a company called Grok. Okay.
Mm-hmm.
And you can say this technology is really good. It's going to help them do some things in inference and the way that the efficiency in which their chips and their IP will work with their GPUs and all that sort of stuff. But they're also skirting regulation because this is not something that the FTC would allow NVIDIA to buy this company. But what they're doing is they're licensing their IP and they're hiring all of their senior, managers and developers and scientists, whatever. Come on, man. This is what's going on. And fine, have a ball, build the biggest, most important company that ever existed on the face of the earth. And let's let all of these tech overlords that are all going to be trillionaires in 5 years, more important and literally than most governments around the world. And they're obviously demonstrating the fact that they can influence our government in many different ways. They can affect the outcomes of elections. They can do whatever they want. Think about the regulators. They're literally just skirting regulators. If you don't want regulators, fine. You want a kleptocracy, fine. You know what I mean? You want things that these people can do and develop and build and put out in the world that are literally going to make humans and our efforts to be obsolete at some point. Have a ball. I'm not going to be around for it, guy. You're going to be around for it?
Probably not. You know what we're not going to be around for?
What?
Noon. Because I got to take a leak because we've been talking a lot here. By the way, Amanda's doing great. In case anybody was concerned.
Well, listen, we just wanted to exercise some things here as we get into year end.
A muscle, yeah.
Well, not really. Exercise.
I think we got Liz Thomas on the market call. I want to say Wednesday. I think. I don't know if she's going to be with us or not.
Amanda just said hit oil. Team is asking.
Okay.
So oil's up a little bit today. Not a lot of progress. It's really weird what came out of Zelensky and Trump's meeting, right? Trump seemed pretty, I don't know, I'd use the term constructive on what happened. But then the flip side of it is it didn't seem like there was any breakthroughs. Those are what the articles basically said. Now you could say, well, crude's bouncing a little bit. I mean, it still can't get out of its own way.
You know what made a not an all-time high, but you know what made a 52-week high today?
Let's see. One of your energy names.
ExxonMobil.
Okay.
120, 130. Wow. Just throwing that out there. So
I mean, that is a great Look, we've had that right there. This is a great looking chart. By the
Well,
way.
I mean, the longer the base, the higher in outer space, and this has been, trading side. If you longer term, you'll see what I'm looking at. For 3 years, I mean, the thing has gone nowhere. I mean, there you go. And now all of a sudden, it's showing some signs of life. So that sideways action from the early 2023, I think it's going to reconcile itself higher in 2026. That's just me.
Well, it's just interestingly though, it's funny. Like I just want to do one thing for a second. So if you look at, Chevron and Exxon, their market caps, they're what, almost $1 trillion combined. And one of the things that's interesting to me, Guy, is obviously this is one of the more important resources on the face of the earth that they, refine and, this is their business. But, we've seen $1 trillion market caps gain 30%. Right, in weeks, I mean, that's gone on in the tech industry. And it is interesting to me that like a stock like this or X, they just can't move like that. You know what I mean? So it's you want to have,
yeah, that's
you
right.
want to have exposure there. You know what I mean? Like have exposure. You know what I mean? Like the return profile is never going to be anything like, but then go back to, 22. I guess that was the war, right? You saw that sort of move, but I don't know. I'm with you. You've had a really nice call on these things. You and I have taken a look at the XLE as one way to play it. Those top 3 or 4 names make up 40% of the weight of the XLE.
That would be Chevron, Conoco, and the Exxon Mobil.
Guy, are you starting to think about what your anagram is going to be?
Funny you say that because if I were to use Exxon Mobil, is it you using the X because that's the first letter in the symbol, or is it an E?
What have you traditionally? No, you've done Alibaba.
I try to play it correctly.
But you do the ticker?
Well, I do the ticker because Baba is Alibaba, but I use the B.
Yeah. So what I've done,
Motors is T.
So
Uber is U.
I'm going to change. And by the way, this is acronyms for fast money, dumbest freaking device ever constructed for financial media. And again, Sandy, if you hear this, it has nothing to do with you. It was started under, a
different regime.
So if it was your regime and you're listening to this, sorry, I hate it. But this is what I'm going to do this year. And I'm not going to preview it right here. I am going to use, you ready for this? The ticker of a stock that I want to add into my acronym. Okay. So like, for instance, the ticker of the stock, and then I'm going to have the 4 letters of other tickers. So I'm really going to
understand. Look, that's clever.
And I did that a few years ago with Tesla Q. Do you remember that? So that was the opposite of the Tesla.
How could I forget?
And it worked well. The Tesla Q worked well 3 years ago. I don't talk about Tesla anymore. I could give 2 shits about Tesla. Get in there, have a ball in those robo-taxis, use your Optimus to make your dinner or take the garbage out.
Talking about it now.
Whatever. I just said, have a ball in 2026. You're going to be able to go on a Tesla.
I got to think about my anagram for this year.
Should we preview them here? Like
maybe. I haven't thought about it yet. But
all right. Well, we did oil.
Nice. Yeah.
Is Exxon going to be in your anagram next year?
Potentially, but I don't know. I don't know if it's going to be an E or an X. Depends on what word I'm coming up with.
There are 2 charts that both start with M that I think are 2 of the worst looking charts in the entire stock market. Do you want me to
Microsoft is one of them. And the other M, you wouldn't do Macy's because that's not how you roll.
Don't go too far from where you were with Microsoft.
Micron.
Nope.
I don't know.
Meta.
Oh, that's the Facebook. I don't ever say the word Meta, but look at you.
These literally are 2 of the worst acting stars. I actually think, and let's pull up Micron for a second here too. Stock is up 240%. We already know what, like DRAM pricing is, and they're sold out for this and whatever. I think that you saw the fever break in the major hyperscalers, and then it moved obviously to memory and storage, and some contract manufacturing. And, we talked about Celestica. I think when you see these break, I think that the trade is over for a while. I mean, for a long time, to be honest with you.
Were you a fan of WKRP in Cincinnati?
Of course.
I mean, Dr. Johnny Fever.
Yeah. Those guys...
he had a cameo in, if you recall, this is Spinal Tap
in the first one.
Yeah. And then, of course, not to be outdone was Venus Flytrap, which is one. If I were a disc jockey, Venus Flytrap is a badass name.
What about the turkey drop? That
Yeah,
episode.
I thought they could fly.
Oh my God. That is quite possibly one of the funniest things ever. That was a show, by the way. I was very young when that show was on. That was not something like a 9-year-old kid was that interested in. You know what I mean? It felt very grown up. You know what I'm saying? Yeah. All right, listen, we should get out of here. We'll be back tomorrow, 11 a.m. Carter Braxton worth of work.
I mean, at this rate, we might roll into tomorrow at 11 a.m.
Bill says he's got to work tonight. He's got a job. He's got a show to do. The Greenwich Comedy Club, guys, if you happen to be on New York Comedy Club, where is it, Bill?
4th Street.
What time? 4th Street, New York Comedy Club. Billy Hockman. You can follow him on 10:30 p.m. So if you're out there and you're just reveling, getting ready for the ball drop Wednesday night, Guy and I are going to be on Fast Money tonight, tomorrow, and New Year's Eve. How about that?
That's epic.
You're going to dust off your
East Village.
Yeah. Are you going to dust off your tuxedo, your dinner jacket?
Monday, December 29th. Vinny Guadagnino. Is that right? Does Bill hear me?
Vinny G. Yeah, he can hear you.
Kevin Dombrowski. He sounds hysterical. Juan Nicolan.
Did I see Juan last week when I went to your show?
Vanessa.
Go to the 10:30.
Oh, Vanessa Jackson. I mean, this sounds like
I've seen Vanessa. She has the long dreads. Vanessa.
No.
She was funny though. That one.
8:30. My God. 9:15. 10:30.
Yeah.
Okay. On the west side, we don't want that one because he's not on the Upper West Side.
No.
We want the 10:30.
It's not gonna say his name right now.
In the East Village, 10:30.
Okay.
Hold on.
10:30 in the East Village.
10:30. Jordan Rock. No, that's not the East Village.
But Bill's. We're gonna come tomorrow with where he is
Holy
tomorrow.
Shit. I mean, they're really hiding where Bill is.
All right, stop it. Okay. Billy Hockman, go follow him on the Instagram. I promise you he's funny. I've seen him live a bunch. And he obviously, is funny, makes us crack up.
It'd be easier to find whatchamaface's plane. What was the woman that crashed? Amelia Earhart's plane.
Although I
think playing that tonight.
I think somebody found it. It was off one of like the Antolls.
Monday, December 29th, Upper West Side, 11:30 p.m. East Village.
Amanda's saying so fun. Sorry, everyone. All right,
Maximilian Spinelli.
Remember that thing that guy had to take a leak? We'll see you tomorrow. Carter Braxton, we're at Dan Nathan, Guy Adami. Check out the Risk Reversal pod that dropped on Christmas
and
Day.
Our Substack, killing it.
We had Oz Perlman on. Oz Perlman, he did a couple tricks with Liz and me. Like, he'll blow your mind. So go check that out. He wrote a book. Oh, by the way, if you want one of his books, Read Your Mind for free. Go to the podcast stores, leave a review, hopefully positive. Take a screenshot, send it to contact@riskreversal.com, and Amanda will send you one of those books. It's a great book. Go check out the podcast. Go leave a review. Get a book. All right, I'll see you tomorrow, everyone. Thanks.
This episode of Market Call is presented by Fidelity Investments and their all-new advanced trading platform, Fidelity Trader Plus. Try it at fidelity.com/Trader Plus. Fidelity Investments and Market Call are not affiliated. Views, opinions, products, services, and strategies discussed are not endorsed or promoted by Fidelity Investments. Fidelity Brokerage Services, LLC, member NYSE, SIPC.